Thanks for joining us at lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get to the headlines. Indian markets rebound after a two-day fall led by gain in banking stocks and index heavyweight RIL.
Money markets await signals from the RBI's long-term Forex swap today.
Jet Airways lenders approved the resolution plan proposed by State Bank of India. A large chunk of the 1,500 crore interim financing will go towards paying lessors and employee wages.
The UK Parliament takes away control from Theresa May on Brexit after the Prime Minister concedes that she doesn't have enough support.
All right, let's first take a look at how markets are faring. Yatin is here with us.
Good afternoon, Ira. And select PSU banks and metal stocks are moving in trade. If you look at the Nifty, not doing much. The market breadth remains slightly positive. So if you look at the advance decline ratio on the Nifty 50, 32 advances for 18 declines. On the gaining side, we have the likes of Vedanta, NTPC, GAIL, SBI. Most of them PSUs moving anywhere between 1.5% to 2.5%. On the flip side, we have technology stocks which have been weak for a couple of trading sessions now. So we have Tech Mahindra, Infosys, TCS, all of these heavyweights down 1.5%. And what's losing steam in trade is, along with the IT stocks is UPL and ITC. Select selling seen in trade today. What's doing well in trade is Jet Airways. That stock is up 10%. GMR Infra as well as DLF also remain in focus. DL, of course, they have announced the QIP plans, so they will be closing the institutional offer shortly. Most of the proceeds will be used to reduce debt according to exchange filings. And also we have GMR Infra, and after the land monetization deal, that stock is also gaining in trade, 8% up for that one. What also moving in trade is the likes of REC, PFC. All of these stocks remaining quite active in trade today.
Nathan, thank you for that. A consortium of Jet Airways lenders have approved the resolution plan proposed by lead lender SBI with Naresh Goel's resignation and the conversion of debt into equity. Lenders are now in full control of the airline. Banks will also infuse about 1,500 crore as interim support to the airline. Vishwanath Nair joins us with what the plan going ahead for Jet Airways is likely to be. Vishwanath.
Interesting plan. 1,500 crore is this debt support that was announced in the board resolution that was put out on the stock exchanges yesterday. Again, the SBI chairman spoke to us. He specified that this money is going to be in the form of some kind of non-listed debt instrument. What we understand from the banking sources is that most of this money will go into paying dues of the lessors who have already grounded a number of Jet Airways planes, as well as the employee wages. Employees have not been paid for a very long time now, so at least in part. So their salaries need to be taken care of. Once these two things are done, then the interim management committee, which has been set up at Jet Airways to look at the day-to-day operations, those guys and as well as the lending consortium will sit together and decide what operational needs need to be addressed with the remaining funds, if there are any. What we also understand is that the lenders are currently in talks to appoint a merchant banker who will help them find this new buyer who's supposed to come in and take over all of the stake of Jet Airways that the lenders are controlling within the next 2 months. So, this was something that Rajesh Kumar specified, that within 2 months they are confident that they will find a new buyer, and then they will get out of this case rather than remain invested in this entity. Now, remember that whenever lenders have tried to do this in the past, the results have not been very encouraging. So it still remains to be seen whether there is a new buyer who finally takes over these assets, these equities, this equity stake, and takes over the airline itself. Of course, as Naresh Goel himself has announced that him and his wife have both stepped down from the board of the company, as well as Kevin Knight, who's one of the representative board members from Etihad. He's also stepped down from the board. So Etihad's stake is about 12% now. What happens to the stake, whether the lenders will take over, whether the new buyer will take over, all of these things will get clearer in the next 2 months.
All right, Vishwanath, thanks so much. As Vishwanath said, SBI chairman Rajneesh Kumar had said that it will take just about 2 months to exit. Let's hear out what he had to say.
So time is of essence because the condition of the company is such a scenario. Lenders would like that they exit this investment as quickly as possible and give the chance to the new investor to revive it. But Jet Airways, lenders believe that it is a great brand, it has great value, and the time which was wasted in ironing out the differences between the promoters, it led to this situation where the Jet is in today, but it can revive. We are very confident about it. So this is the priority funding which is needed, and this will be sufficient to revive the Jet Airways in our assessment. And this funding is, as I said, just for 2 months cushion we have kept. And then once the new investors have formed up their mind, so there will not be much of an issue. The structure of the restructuring of the equity and debt is in such a manner that the facility which is being proposed is fully secured. It will be likely a 10-year instrument, the details of which will be made, and it will not be a listed debt instrument. It will be an unlisted debt instrument.
Okay, that's the chairman of State Bank of India. The new board or the new management committee is going to have quite a job at hand, including getting control over costs for Jet Airways. Samit is here to tell us how Jet Airways stacks up against its peers, operationally speaking. Samit.
So I'll tell you how it does compare with its peers. But to start off with, I'll just tell you what actually Jet needs to restructure its the total cost. If you see now, firstly it needs new fuel-efficient aircraft. It also needs a radical restructuring and its total cost structure, which could also mean a change in its business model and a mature aviation market where people don't, where competitors don't go for market share by on account of profitability. Now, because of all these three reasons in the past, the company's financials have been hurting. So if you see the company's revenue minus the cost per available seat kilometer, now till the third quarter of financial year 2017, it was Jet Airways was able to break even on its cost. However, post that, inefficient operations, higher fuel cost, weaker rupee and strong competition did impact the company's financials. Now the first issue that needs to be addressed for Jet Airways is its old fleet. Now because of this old fleet, Jet's fuel cost per available seat kilometer is on an average 3% higher compared to its larger peers, that is Indigo and SpiceJet. Now this is despite the fact that Jet Airways has deployed most of its capacity on international routes where the tax amount is lower. So it has nearly 60% of its total capacity deployed on the international routes, and international routes has lower taxes. So this cost should have been lower for Jet Airways, but due to old fleet, this cost is still higher for Jet Airways compared to its peers like Indigo and SpiceJet. Now the second issue is Jet is overstaffed. Now as a full service carrier, the company ends up spending more on employee compared to its low cost carriers and peers like Indigo and SpiceJet. Now Jet shells out on an average 35% more on its employees as it needs more crew and than peers for its extra services. Now though Jet being the third largest airline company in India by capacity, it has close to 22,000 employees on its payroll as compared to Indigo's 18,000 plus and SpiceJet's 8,500 plus employee count. Now as it is a full service airline, its administration cost, selling and distribution cost is also higher, and that is because of its premium slots and lounges. Now to add to this, the maintenance cost, which also comes under the other cost for Jet Airways, is also higher due to an old fleet. So because of all these reasons, the Jet's total other cost is now higher by nearly 65% compared to its other peers. Lastly, it's the high debt and the low credit rating which have also weighed on Jet's financials. Now Jet owes close to 8,500 crore to other financial institutions, which is nearly 7 times more than what SpiceJet owes, and it's and when compared to Indigo, Indigo is a debt-free company. So that is one thing that has also been hurting Jet's financials. Now if you see, the Jet's total finance cost is more than the combined finance cost of SpiceJet and Indigo. Lastly, currently, if you see now, the fuel prices have come down from their earlier highs while ticket prices have improved. Now, because of this, Jet could report lower losses in the current ongoing quarter. But with an old fleet and high cost structure, the airline would continue to remain vulnerable to frequently changing industry dynamics in the aviation industry.
All right, Samit, thanks so much for explaining that story up on BloombergQuint.com as well. Let's move on. Gains in the Indian rupee and tax breaks announced by the government are luring investors back towards the masala bond market. Corporate India too is returning to raise funds through offshore rupee notes. Anurag Joshi of Bloomberg News joins us with the details. Anurag, they've made a comeback.
Yeah, hi. So a rebound in the rupee, and the rupee is headed for its second monthly gain in March. that's boosted investor confidence for masala bonds. Now, if you see last year, there was a lull in issuance in masala bonds, and that had also to do with the overall sentiments for Indian dollar bonds and the emerging markets in general. So now you have a stronger rupee, and also the fact that last September the government had introduced a tax exemption for companies that were issuing masala bonds in this financial year until March 31st. So that deadline is approaching. So the companies that had been waiting on the sidelines are very keen to come and raise money through the masala bond market. And one of the reasons, they are also very keen to go to the masala bond market is that it helps to diversify the investor base and also, help them tap rupee funds outside India. Of course, you have a very vibrant bond market in India, but the fact is that there are limitations in the amount it can fund. So the fact that you're approaching international investors and, you're raising rupees abroad, that just, changes the whole dynamics and, just helps companies, especially infrastructure funding, get more money to fund projects and plans over the long term.
Anurag, thank you so much for that. That's masala bonds for you. Meanwhile, the Congress has promised a minimum income support of 72,000 rupees a year to the poorest 20% of the country if voted to power in the upcoming elections. Unveiling the party manifesto in New Delhi, Rahul Gandhi announced the Nyunatam Aay Yojana or the Nyaya Yojana that will provide income support to families that earn less than 12,000 rupees a month. The Congress expects 5 crore families and 25 crore people to benefit from the scheme. Now, does India have the fiscal headroom for that? What are the logistical challenges associated with such a broad-based scheme? To understand that, let's welcome in Abhijit Sen, former member of the Planning Commission. He joins us on the phone line. Mr. Sen, thank you so much for joining us. What did you make of this announcement by the Congress party? Logistically, is this possible? Does India have the fiscal headroom to implement such a scheme?
Well, I'm thoroughly confused by this announcement for a number of reasons. Number one is that the announcement so far that he had made was about a minimum income kind of thing, which presumably was, and he said that we are top up or something. Now it seems to be something different. But it's nowhere spelled out what exactly it is, except, of course, this mention of 5 crore households and 6,000 rupees a month. If you just simply say that's all it is, that would cost about 3.5 lakh crores per annum. That's about 2% of GDP. And that's a huge amount of money. So, somewhere along the line, Rahul and his advisors have moved from an idea of actually targeting some people to trying to do it for everybody, and trying to do it for 20% of the population, and make it into just a cash handout of 6,000 rupees each, which is okay, it's a cash handout. That's it. So I'm confused. What exactly do they have in mind? They haven't spelled it out.
Dr. Sen, like you said, there was some suggestion that this would be a top-up. So if they have a minimum income line of 12,000, people earning below that will get topped up to the extent that they reach that 12,000 mark. I don't know whether those are the details, but should that be the nature of the scheme, Dr. Sen? Is there data available on a fairly timely basis to be able to do this? What is the data set? Is it the SECC 2011 data set that they'll start with, or is there more?
No, I have no idea. In fact, I think the idea that you can actually give it to people on the basis of their incomes is pretty stupid, because you simply don't have that data. And, our experience in the past with all our anti-poverty programs has been that whenever you try to go by a BPL list of one kind or the other, you make mistakes. And these mistakes are very large. Our old BPL list had about half the people who shouldn't be there were there, and only less than half the people who should be there were there. So both the type 1 and type 2 errors were very, very large. And the SECC might have improved matters, but the errors will still remain. So anything which tries to cover a small number of people has its problems. Errors go down if the coverage becomes large, especially if it covers everyone, then the errors are zero. On the other hand, trying to actually use any data set to try and guess people's incomes increases the errors massively. So, so there are trade-offs there. I think really what we are seeing, and this is not it's not just Congress or Mr. Gandhi, it's across the political spectrum.
Correct.
There is now an obsession with the idea of cash handouts.
Right.
And this happened with state governments, Telangana, this happened with Odisha, it happened with the BJP with the farmers' cash handout, and now it's happening with this. Now, this obsession, I think, is unfortunate. I mean, it's a good sell maybe for election reasons, but from the point of view of actually getting at problems, it's not such a good idea.
Mr. Sen, if I can just sort of ask you to elaborate a little further. Agreed that this has become a popular idea. Whoever forms the government may implement an income support scheme or a cash handout scheme, as you call it, in some form. What are the ramifications of such a move, on labor markets, for example? And does this also, in a sense, presuppose that you will see price distorting schemes like MSP or subsidies being rolled back? On both these aspects, if you could explain.
See, the point is that if you're actually talking about subsidies and MSP, you're presumably talking about the PDS.
Yes.
Now, the point about the PDS is that it's a scheme which, like no other scheme, it has been attacked in the past as distorting, it's horrible and things. It remains popular on the ground. No government so far has been able to roll it back. And it covers at the moment 75% of the rural population and about 50% of the urban population. So about 2/3 of the households in the country. Giving up the PDS means that we are taking away from 2/3 of the household, much lesser amounts, but giving only to the bottom 20%, which is if Rahul's peasant's latest statement is correct. Now, the political implications of that are horrendous. I mean, if they actually do it. Because and secondly, the PDS is the rationale for the MSP for rice and wheat. MSPs hardly work elsewhere. But for rice and wheat, they do because the government needs to buy to keep the PDS running. Now, a lot of these farmers are not poor. But these farmers, these are surplus farmers. They would lose. So yes, the whole thing might become, if you can target properly, which I doubt, the whole thing might become more equitable, but it's hardly likely to please a lot of people. A hell of a lot of more people would be actually angry at that, giving up the MSP PDS system and putting all the money into this, because they would lose and they wouldn't gain anything.
Absolutely. Dr. Sen, I have one last question, again, slightly broader question. It's very unclear as to where these ideas of transfers are coming from. Let me explain. The BJP's transfer program seems to be emerging from a concern of lower farm incomes, lower food prices, lower farm incomes, hence targeted at the farm sector. The Congress's plan seems to be emerging from a broader issue of income inequality. Surely these are different debates which need to be thought out. What are the causes? What is the solution? Long-term estimates of what the solution will cost. Very haphazard sort of way that India's political parties are going about this.
Correct.
The farm thing is stupid because it's very difficult to actually say who is a farmer and who is not a farmer, because most people in rural areas do some farming, but most of them do something else as well, and many of them don't own land. So the whole BJP thing leaves out tenants, it leaves out agricultural laborers, and it leaves out more than half the people involved in agriculture. And therefore, there are issues there which could be covered by saying, okay, we are going to give it to everybody like Odisha did. And an extension of that would be an income transfer of the type Rahul is talking about. So the two are, all of these are on a sliding scale in some sense. But the problem with these sorts of handouts are that what is the purpose, as you rightly put it, what is the purpose you're serving? It's certainly, I mean, the farmer thing is awkward. If you look at the budget numbers this year, you'll find that the budget of the Department of Agriculture and Cooperation is about 120,000 crores plus, of which 75,000 crores is on this income transfer. And then there's a further 40,000 crore or so, which are either interest subventions or the insurance scheme, plus some price support system. The remaining is about 17,000 crores, which is the core work of the Department of Agriculture. And that 17,000 crores is unchanged in nominal terms for the last 5 years. So you're adding on all sorts of things, and I am not very sure that you're doing farmers a great benefit by doing that. I mean, you might say that all our government intervention everywhere doesn't do anything.
Right.
But you'll have to actually say something like that. When, you know, you're roughly 17 to 18,000 crores is the core function of that department, and the department as a whole is spending 129. All the guys, the fat cats, will be actually going where the money is. That's where the ideas would be going,
True.
not to making agriculture secure. And I think similar is the case for the anti-poverty issue or trying to make things more equal. I would have thought, actually done the NREGA, and the NREGA having been attacked by the opposition, I mean by BJP, when it was in opposition, and continued to be attacked in the first few remarks of the present government, is now something they own. It's one scheme where nobody is saying it's a bad scheme. Everybody says it's a good scheme, and every budget says we're putting more money into it.
True.
And what they could have done is essentially, for the people who can work, they could have simply said there's not 100 days per household at the moment. It just increased that amount to any day, so throughout the year, a person can actually come for a job if they want it. That would have served exactly the same purpose. You'd have to provide some job. You could have got some output out of it, maybe not be any great. It would be a continuation of something that you did, something for which you are getting mileage already, and you say that we're expanding it and we're going to make it functioning better. Politically, I think that would have been better. Of course, then there are people who are unable to work. These are the old or the, disabled. You could simply have pensions for them. Pensions are very popular schemes, and I know for a fact that in Telangana, the government got more votes out of that expansion of their pension scheme that they did a little while earlier, and not so much from their cash handout. I mean, the cash handout didn't actually start working in a proper manner for it to have much impact on the election results. The pension did.
Right. Dr. Sen,
and the combination of a pension and expanded NREGA would have served the purpose equally well. And you know where you're walking there.
Right, Dr. Sen, much broader debate, and we're sort of wading into it without much information as well. Thanks so much for joining us with your quick perspective there. We've got the political side of the story coming up after the show. Sanjay Pugilia will be talking to Digvijay Singh on the issue.